Well, hello. This is Jeremy North, and I have your educational economic update for April 2021. Well, in this month's video, I will discuss major headlines that influenced markets in March of 2021. And as always, please stay tuned at the end of this video for my required disclosure statement. Well, March market action saw the stock market rebound very strongly, while the bond markets continued their pullback as interest rates continued to climb. While volatility was the norm in March, a renewed optimism began with higher than expected vaccine numbers, as well as an increase in economic growth due to the large stimulus plan put in place during the month. In addition, the Federal Reserve Chairman Jerome Powell reminded us that the Fed will continue the course they have been on, which is designed to stimulate the economy. Powell had little concern for the recent volatility due to the well-capitalized banking system here in the U.S. He also reiterated that while the Fed will keep a close eye on the economy and inflation, they are dedicated to a full economic recovery by supporting to keep short-term interest rates low until the recovery is complete. Adding to the economic optimism is the American Jobs Plan. That was signed on the last day of March, which proposed a $2.25 trillion package, mostly dedicated to the infrastructure improvements in the U.S. Overall, this huge influx of economic support is much larger than the markets were expecting at the beginning of the year, and this really helped stock traders overcome inflation fears, which were affecting markets earlier in the month. So for the month of March, the S&P was up 4.3%, its best month since last November, leaving it up approximately 5.7% for the year. The more tech-heavy NASDAQ index was only up about 0.5% in March, and putting them at around 3% for the year. The Ag Bond Index closed down 1.31%, where it's negative 3.6% for the year, which is one of the worst in a long time. While the government's massive stimulus has helped stocks, it is a concern from the bond market and caused a rise in longer-term interest rates. And as we know and remember, when interest rates rise, overall bond prices fall. The large monetary stimulus, which equated to about 25% of GDP, and the strong vaccine rollout has never been seen like this before in our lifetimes. It is causing economic data and projections for the remainder of 2021 likely to improve. GDP is expected to grow faster than any time since the mid-1980s, and with the unemployment numbers continuing to fall, expectations that these efforts will continue to support the stock market. While it is unclear if interest rates will continue to rise, many bond experts are advocating shorter-term bond maturities for the time being. While we remain positive, it is always wise to be cautious. If you have any questions about how the recent economic reports could impact your long-term goals, we are here to help. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 636-896-4052. We are always happy to talk. With all that being said, here is the required disclosure statement that I'm going to read. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult with your financial professional before making any investment decisions. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. Thanks again, Jeremy North signing out. Have a wonderful month of April, and we'll see you next month. Take care. Bye-bye.